This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion. Oh man, how many of you people out there have been in love for the last couple of years? Just in love. You go to the Apple store, you go in there, there's a bunch of weird dudes, weird women, weird people. I don't know. Maybe they're not weird. I don't know. But they all got their nice little uniforms on. They sell you a gadget. You've got so many Apple products, you could probably connect them to every orifice on your body and get email and get text messages and have all of this information connected to the matrix, being tracked. And you know what? It was a damn great story, wasn't it? As long as that stock was going straight freaking up. And oh, by the way, I think Too Young to Fall in Love by The Crew, falling in love. Isn't that what people did with Apple? They fell in love with the stock. They fell in love. Literally, romantically, perhaps sexually for some people. They fell in love with this stock. Who knows what they did with it? Who knows what they did with this company behind closed doors? I have no earthly idea. Look, I'm an Apple user. I like the products, but I don't worship the thing, I mean, if you think about it, look, Steve Jobs is great, okay? Fantastic. Built the company. But did you ever wonder when you would actually see these things where he would show up in his black t-shirt and his jeans, and you would look in the audience of these poor folks that would come every year, and they would look like they had some kind of mental problem? Seriously? Some kind of weird hero worship type thing? Listen, it's over, man. We've got all the information we could ever use as human beings. It's over. All they can do is shrink these devices and put them inside our brains. There's no more left. That's the fundamental view. But let's take a step back for a second. So Apple gets to a record high, looks like last September, of $702.10. And at that time, I will guarantee you, every last Wall Street analyst on the planet who gets paid all this money to pretend, and they are pretending, to pretend that they can predict where a stock is going to go next. I don't have the data in front of me, but I'll bet you that they weren't saying it was going to go down. Today, it reaches $455.89, down 34% from its peak. I think I can say that Apple has the property of going down. It is declining. Now, I don't know what the hell it means that it's going down. I was in the Apple store the other day. I bought my first iPhone. I've now used an iPhone for 48 hours. I will have to say it's a convenient damn little device. There's no doubt about it. But you know what? I don't think I'm really going to be addicted to it any more than my other stuff, my other little phone. I mean, it's nice. The voicemail is easier, all that kind of fun stuff. But what does it have to do with the stock? So let me read some of these guys that have come out. You know what? While we're at it, before I go ahead, because I opened up with that Cruise song and, people just in love with Apple. But I think a little more, because let's face it, people have been excited by this stock, literally in an orgasmic way. They've been excited by this stock and this company for a long time. Seriously, if you walk into an Apple store, literally, these people are buzzing. Like, what are all these? The devices are cool, man. They're greatly designed. They're beautiful. They're functional. They do all this cool stuff. But we knew all of that last fall, and the stock price was at $700. Today, it's at $450. So Jeff Gundlach, that name sounds familiar. I don't know if he's a former .com guy that made all kind of predictions or not. I'm not sure. But he made a comment that I saw the other day. He said that Apple is a broken company. Okay, they've sold who knows how much stuff. So actually the other day, they apparently had a profit of $13 billion. They sold 28% more iPhones and 48% more iPads. And the stock went down. And so I've got all these guys here that are talking. So I don't know who any of these people are. They're all paid lots of money by you By you and your buy and hold mutual funds, you pay for the people's salaries. Now, I'm sure we can find an example that none of these people were saying any of this at $700 a share. They get these ideas when it goes from $700 to $450. Well, of course, it's like the old Enron investors, the institutional Enron investors. When Enron was at 90 and Jeff Skilling was out at 50 a share, and they were still holding on at $2 a share, and then they wanted to sue everybody because they couldn't understand why Enron was at $2 a share and there was fake trading floors. Clearly, that's not the case with Apple. Apple makes real products, et cetera, et cetera. I'm just making the point. Follow the price action. So this whole buildup was to get to the point of saying trend followers don't have to know anything about the orgy going on inside an Apple store. They don't have to know what's going on in the back rooms behind the boxes with some of these folks that probably have been sheltered. I don't even want to imagine what takes place with Apple employees behind boxes in those stores. I just hope that they have hand sanitizer. That's what I go, because when they hand me the freaking phone and I have to go home, I just hope my phone has not been contaminated by some weird activity. Okay, that's a slight tangent. But let me read some of these analysts who dissected Apple. So this one guy, Sha Wu, he says that this is the right move in resetting consensus. We don't think the Apple growth story is over, but shares will likely languish until confidence is restored. Would you pay that man money for anything? What does that mean? We don't think the Apple growth story is over, but shares will likely languish until confidence is restored. It's it's almost DC political, isn't it? Okay, let's move on. So who's this next guy? This guy's at Nomura Equity Research, Stuart Jeffrey. So Apple's financial performance is still exceptional, but the scope for material earnings upside appears to have gone. To reaccelerate growth, Apple needs to launch new products, yet there's not going to be many of those until June. Oh, okay, that helps me. Travis McCord at Raymond James. He says that Apple has numerous areas for future growth, including TVs, tablets, lower-priced phones. Which of these Apple chooses and how management executes the high wire act of incremental growth versus cannibalization will determine Apple's future stock price. For now, and at this valuation, we are betting on management. I don't know who Travis McCord is. I would not pay this guy to wash my car. I might get a foot massage from him. Okay? You know what? I'll even let him paint my toenails black. Travis, if you want to paint my toenails black, you're more than welcome to. But if you're a financial person, a financial advisor, somebody who's attempting, this is nonsensical. Your words don't attach to the stock price, and you know it. You know damn well those words don't attach to the stock price. The stock was at 700. Were you talking about this at 700? No, you're talking about it at 450 because stock has gone down. It's gone down. But guess what? I'm sitting here giving you this whole rip of fundamental analysis, right? A few cruise songs to remind you not to fall in love. Kickstart My Heart just to kind of remind you that, hey, the excitement that you think you see in that store doesn't necessarily translate to the stock. So once again, where was Apple stock a couple years ago? 40, 50, 60, 70 bucks a share, whatever. Goes to 700, goes to 450. Ride the train up. Ride the train down. Is this not the most classical example that most people can relate to? Now, I will guarantee you there are Apple acolytes sitting out there right now who perhaps bought at $6.50 a share, are holding it at $4.50 a share, and are listening to all these morons that I'm critiquing right now. And I'm not calling them morons because I think they're bad people. I'm just calling them morons because they're morons. I'm sure they're nice people. I'm sure they don't beat their dog or anything like that. Well, maybe some of them do. I don't have any earthly idea. But they don't know what they're talking about in the sense they can't help you make money. Apple goes from 50, 60, 70 a share to 750. It's at 450 now, or 700. It's at 450 now. What conclusion can you draw except it's gone from 700 to 450? Think about it. Is it cheap now? What if it's at 350 next month? Is it cheaper then? What if it's 250 the following month? Let me continue here. Gene Munster at Piper Jaffray. We are buyers of Apple on the pullback. Well, that's a classical technique of most buy and hold nonsensical fools. Buy it on the dip. And if it keeps dipping all the way down, keep buying more of it. Because clearly you can hold on forever because we all have infinite lifetimes. What kind of trading strategy is that? If the market's going down, get out or short it. Get out or short it. The price knows more than any of these guys. Continuing, Brian White of Topeka Capital Markets. Apple is clearly undergoing a shift in its shareholder base. However, we believe a much more significant return of cash is necessary to attract more value-oriented investors. I don't know what that means. I have no idea what that means. I don't think that guy knows what it means either. But you know what? It sounds good. Sounds fantastic. What else do they have here to say? So Apple is transitioning from this is some other guy. Apple is transitioning from a supercharged growth stock to a more plodding value stock. I don't know. I don't know if it is or not. And none of these people know if it's doing that or not. They don't know. They are making this up. They are just sitting down and making this up. There is no way on this planet to attach all these fundamental views to the movement of the stock price. Somebody can go out there and do the research, okay? But I will guarantee you that these folks were not all sitting around and predicting these exact same things at $700 a share. They were either silent and one of their partners was telling you to buy at 700. And then when it starts going down, their partner's quiet. And then they go ahead and take the other side of the coin and say, hey, it's going down now. Here's all the we can value it. And they start saying all this stuff that no one, I mean, it sounds great. Look, listening to me right now, you have to understand the best, most successful traders on the planet do not have the insight that these stock jockeys in the Yahoo Finance, in the Bloombergs, who they purport to have all these predictions and all this insight. If the best traders on the planet don't have it, how do these people have it? But you know what? It's kind of interesting if you think about it. Apple has done such a fantastic job of giving us a device. Everybody has a device or two or three or four. And we're smashed with information all day long. More information, more information, more information, more information, more information. It's like on loop, right? What do we do with all this information? And I'm strictly talking from an investing trading standpoint. What do you do with all this information? I've just read you all these, quote, analysts who purport to know what to do next. And clearly, if you read their words, it doesn't make any sense. There's no rhyme or reason in any of this. It's just, they're just talking to talk. What else do I have here? So what's this guy says? He says, yet investors might be frustrated that the analysts are taking down price targets now after the stock has already been pummeled instead of warning investors ahead of time. Quote, there's a fair amount of herd mentality in the analyst community. That's why the analysts are usually behind the curve. Isn't that the understatement of the year? So I have a little commercial that I want to play. It was from a commercial, and I just think this is it's kind of cute. Let me just play it real quick. It's self-explanatory.
Tonight, our guest, Thomas Sargent, Nobel laureate in economics and one of the most cited economists in the world. Professor Sargent, can you tell me what CD rates will be in 2 years?
No.
If he can't, no one can.
I love that, right? Now, this is a bank using this little fun commercial. At least they're acknowledging that you can't predict anything. You can't predict anything. I mean, Apple's the beast, man. This is the stock, like I said, that's caused, a level of excitement that you almost don't see in any retail outlet. They are the stock that is single-handedly just caused so much excitement. The company that's caused so much excitement. And deservingly so. Great products. They've changed the world. The stock has gone from 700 to 450. Does that mean the products suck? I don't think so. Products look pretty cool to me. Stock has gone from 700 to 450. Can I repeat that again? The stock has gone from 700 to 450. Do you have a conclusion you want to draw just about that? Don't talk to me about the phablet or whatever they're talking about, a larger sized iPhone tablet or Apple TV or what the iPhone sales estimates are going to be. Just absorb one simple thought. 700 to 450. What does it mean to you? What does that mean to you? Even if you know nothing about trend following, you don't have to know anything about trend following. 700 to 450. If you've been in there, if you bought it 690 or you were holding it 700, or you owned it at 450, you bought it 450, it went to 700, you've held it on all the way back to 450. How do you feel right now? Do you feel good? Do you trust? You just trust it's all going to come back? Do you have no knowledge of what happened in 1998, 1999, 2000? Do you have no memory? Have you looked at the Japanese stock market over the last 20, 30 years? Things don't have to go back up. That's not the way the world works. Markets go up, they go parabolic, they come down. I don't care whether you're looking at individual stocks, indices, commodities, currencies, gold. It doesn't make a difference. They all behave the same way because these markets are driven by people. And people are stupid. And I'm not saying I'm even smart. I'm just saying that people, by and large, are stupid. And that's not like I'm not saying that in a way to try and be like, oh, hey, my name is Mike Covel. I'm smarter than all these other people. No. People just emotionally don't do the homework. You know, it's like if you had to sit there and listen to some kid, you know, there was some kid who was trying to learn math, you know, and all he kept saying was, hey, 2 plus 2 equals 7. 2 plus 2 equals 7. You know, at some stage of the game, you would say, hey, why don't you actually learn what 2 plus 2 equals instead of just telling me it equals 7? And if he just keeps saying it equals 7, eventually you would say, well, gosh, that kid is stupid. But there's something wrong with him. Maybe he needs to be in a padded room with some of the Apple employees in the back who are not using hand sanitizer. Anyways, I just want to leave with the notion of 700 to 450. 700 to 450, what does that mean for you? As I think about that, going out, you got to learn a way not to be seduced by the pretty woman. The pretty woman was Apple. Everything about Apple was pretty. The products were pretty. The stores were pretty. Maybe the employees weren't pretty. The stores were pretty. The products were pretty. The stock price was pretty. Looks that could kill. I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.